In case you guys missed the community post, American Towers raises its dividend. So American Towers declares $1.43 per share quarterly, which is a 2.1% increase from the prior dividend of $1.40. Ex-dividend date is June 16th, and they will be paying out on July 8th. So congrats to all the American Towers shareholders. American Towers has been raising its dividend almost every single quarter, so that compounding is amazing. What's up, everybody? This is Investing Sensei here, bringing you episode 135 of the portfolio update. Hopefully you guys are doing awesome. I definitely am, especially in these type of markets where the portfolio has just been continuing to go down. It's actually at $171,917.93, so quite a bit low. But in this update, I'm gonna show you how the portfolio performed this week, and then I'll show you what I bought, what I sold, any dividends that came in, and then I want to go over Target, which is one of the companies that is in my consumer sub pie. That company plunged about 25% after earnings, so I want to show you guys some technical analysis on that and what I'm planning to do, especially since it's been dropping, and that is a company that I am long on. And yeah, from there I'll show you probably Costco as well, and then we'll jump over into the Google Sheets, because remember that every single week we come back, we look at the quarterly dividends. We see this staircase continue to get larger and larger every single quarter, as you'll see that we're currently working on 2022 Q2. So far we've made $220.03 for the month of April, which is actually pretty awesome. We're actually almost getting close to wrapping up the month of May, and I'm excited for that because it should bump it up higher. And then we will jump into June, which is going to be the third month of the quarter, which is typically my best paying quarter of all, which is awesome, guys. And I think hopefully we can reach $800 for the quarter, so it'll be exciting. Make sure that you stick around. If you haven't subscribed and you're new to the channel, be sure to subscribe with that bell notification so you're notified when I upload new videos. And while you're down there, drop a big thumbs up on the videos, help out the channel, and you know, hopefully the YouTube algorithm helps this channel. But if we look over here, I have these scripts that we kick off every single Sunday. No matter how the portfolio has tanked this past week, we're going to see this continue to get bigger and bigger, because we see this yearly, monthly, weekly continue to get bigger every Sunday, no matter what the portfolio is doing. And that is one of the great things about dividend growth investing, especially in these type of times where, you know, we just see dividends coming in, seeing our money continue to reproduce this monthly type of income. Well, this one right here, it's also super motivating. And yeah, we're gonna see how much this grew even though our portfolio went down, because remember, at the long term, we're planning to eventually live off of this amount of dividends. One day we will get this to minimum wage, where our portfolio is working a minimum wage job of 40 hours. That would be pretty awesome. One thing I just want to briefly show you is that you'll see this growth, guys. 2019, for the full year, we only made $779, and then the following year we surpassed it, and then 2021 we surpassed the previous year, and then 2022 we've already made $1,000 and surpassed 2019's full year. So it's also so awesome, motivated in seeing this grow and grow. And you know, we could stay in a stagnated market where we don't see any growth, but those dividends are going to continue to pour in and recompound and just continue to create that dividend snowball. And it's super motivating when you see that, especially in these type of markets where all we're seeing is just red and red, which I'll show you real quick. If you look at the QQQ, which tracks the NASDAQ 100, if you look at the 1 year, which is probably around the high that they reached was right around December or so, you see that they just has been tanking, and it's dropped almost about 28%. I would say 28 to 30% that it's dropped from its highest. And if we look at the SPY, which also tracks the S&P 500, and that one around January 3rd, its highest, it's dropped about 18-19%. So that's quite a big of a drop. We might continue dropping, we don't know, especially because inflation is not under control. And then if we look at the IWM, which tracks the Russell 2000, if we look at this one has also dropped, guys, about 27-28% from its all-time high. So It's definitely a rough market right now, and this is where you create generational wealth. This is where you buy these great companies where you could for the long term. Remember that in the past you're like, man, I should have bought more, and I wish I had gotten those times. And this is the perfect time. You're getting another opportunity to jump over and buy these companies. Like if we look at the value over time, as you'll see over here, I'll show you right here on the 1 week, guys. You'll see that the portfolio actually went down about 4.22%, which is about $7,000, almost $8,000 for the 1 month. You'll see that we dropped all the way from a high of like 190 something, I guess 193, and we've been going downwards about 13.73%. It's almost about 27,000, and we've been dropping this much is because my portfolio is heavily concentrated in tech, and you know, QQQ has just been getting destroyed. You'll see, look at the 1 quarter, we dropped about 14%, about 28,000 again, and we've just been on a downtrend here. 1 year, you'll see that it's about 2.19%. and that's about $3,000, almost $4,000. But you'll see this super volatile market here, and we've been on the downtrend. But if we look at the overall, guys, we're up about 49.65%, which is about 50,000 or 51,000. But what I wanted to show you is the portfolio currently is about 171,000. That means that we would have to go all the way back to about right around June of 2021. June-ish, yeah, of last year, and we're getting great discounts. It's like we're going back in time to be able to buy these great companies and accumulate more shares at back in 2021. So definitely it's a great buying opportunity for me, and I'm going to continue to dollar cost average. Obviously I will not be like investing a lot of money, but I will continue to dollar cost average, continue to accumulate those shares, reinvest those dividends, because right now my main focus is I want to beef up my emergency fund, because you know there's fears of recessions, layoffs, and so I would definitely want to be well equipped. The worst thing that I want to do is ever touch this portfolio to be able to live off of early because of certain circumstances. And if I ever lose my job or whatever happens, I will have that cushion of my emergency fund to tap into until we either exit the recession or, you know, be able to find another job, hopefully. And, you know, we will see. I want to make sure that this portfolio is not touched for 15-20 years from now, when it's a 7-figure portfolio and it's compounding amounts, a huge amount of money. But we will see over time, guys. If you are interested in that journey, remember again that you can subscribe with that bonification, and you will follow along every single Sunday. And yeah, while you're down there, drop a big thumbs up on the video. But guys, let's go ahead and go over here to the activities so I can show you guys everything we did this week. So if we look at the 16th, which is Monday of this past week, is when this started, guys. And we started pretty awesome, guys. On the 16th, we got a referral bonus, $10. Somebody used my referral link in the video description. They signed up to M1 account. I think they deposited $100, and they got $10. I got $10. So thank you so much for whoever signed up. If you are interested in signing up with M1 account, consider using my referral link. It's in the video description. I would appreciate it. And these $10, I'll show you what I used that. So thank you for whoever signed up for that. On the 16th as well, we got a dividend of AbbVie of $49.47. Very, very close to the $50. That is pretty awesome and passive income. On the 16th, we did 2 buys, $25.65. This was a dividend reinvested. So this was Costco, $9.48, and then Realty Income, $16.17. We're just doing drips here. On the 17th, guys, I reinvested that $10. And you know, using my referral link is like you're buying me a cup of coffee. And you know what I did? I bought some Microsoft, guys. I was gonna buy some Starbucks, but I couldn't resist on this Microsoft. We got about 0.03 shares, so that was pretty awesome. And you know, Microsoft has gone down more, so definitely it's a great buying opportunity for me to continue to dollar cost average, because I'm going to continue to dollar cost average because the market can continue going downwards. And you know, until inflation gets under control, you know, we might not even see this volatility end. But on the 18th, guys, we did one buy of $49.47, and that was from AbbVie. So we reinvested back into itself, which almost bought about 0.31 shares. That is pretty cool. And then, guys, on the 19th, we deposited $140. Remember, I typically deposit $100 every single week, and that is to continue to dollar cost average no matter what the portfolio is doing. The extra $40 is because AbbVie paid me a dividend, and then also Caterpillar was going to pay me a dividend. So we did 4 buys. I bought AbbVie $20, and then Caterpillar $20 because of the dollar dividend they paid me out. That's one of my goals. If I pull it up real quick, and I'll show you here. Remember that we do have 2022 goals, which is going to try to keep us on focused and try to aim and achieve these goals. One of them is to drip the dividend plus add an additional $20 from my own money. It kind of just accelerates my growth into that dividend snowball every single, I guess, quarter. And it's pretty awesome. The other thing is number 5, which is continue to dollar cost average every single week. Number 4, I have no idea if we're even going to reach that anymore, especially with the portfolio tanking. And then, you know, we're heavily in tech, and if we hit a recession. But this one was more of a, oh, it'll be cool if we hit it, but if we don't hit it, that's fine. This one is definitely in our control, which is try to have $110,000 invested of my own money. I believe I have about 103 or 104,000 so far invested, so I need about 6,000 more to go. And then I continue to try to achieve 300 on average per month from quarter. We're getting very close to that. If we look over here, you'll see monthly we're about $266.40. This should get closer to the mark once we kick off the scripts by the end of the video. Hopefully we can hit 270, but I don't think we will. But over every single Sunday we should see this grow close to the 300s. So we will see about that, guys. But if I go back over here to the activities, you'll see we also bought $50 worth of Costco. Costco actually moved downwards after Target reported on Wednesday. As well, it dropped, I believe, Walmart, Dollar Tree, and Dollar General. And then we got $50 of Target, guys. Look at this deal right here, $157. We got about 0.31 shares. And then yeah, definitely pretty awesome buying this week. On the 20th, Caterpillar, $6.10 from dividends. And you know, I wish I had some more money right now because I would be buying heavier, but not as aggressive because I could see us going even lower. But yeah, guys, this is what I did this week. Super passive, super easy, especially with M1. You'll see this green button. This is a script I wrote. It's completely available for free. Check it out. It's in one of my playlists, but all it does is adds up all the dividends for us and adds up a pop-up. So you click on the green button. So we made a total of $55.57 this week for doing absolutely nothing, guys. Passive income. These $55.57 actually got reinvested into the portfolio. Well, I guess not the Caterpillar one yet. It will get invested on Monday, but these dividends got reinvested, are going to grow the dividend snowball much larger, and they also got reinvested at an even cheaper price, which means that we were able to accumulate even more shares. That is so cool, guys. But yeah, we made about that much in completely passive income. I'll show you guys here the holdings. If we look by unrealized gains, you'll see that we're still up by Nvidia, United Health Group, Microsoft, Apple, AbbVie, Caterpillar. If we look by what we're in the red, we're definitely red in the Target, which is the next topic we will talk about. Starbucks, we are down. 3M, Disney, JP Morgan, and then American Waterworks. And Target, Starbucks are two of the companies that I really want to continue accumulating more shares. There's just so many deals right now that I don't have enough money, but dollar cost average reinvesting in dividends I think should pay us off in the really long term. But let's just quickly go over Target, guys. So The stock plunge shouldn't deter long-term investors. Let's just quickly go over this. The stock had its worst single-day drop since 1987, plunging 25% as the big box chain badly missed both its own guidance and analyst estimates on the bottom line. It posted adjusted earnings per share of $2.16, down from $3.69 in the quarter a year ago. A result that was propelled by stimulus spending and the pandemic driving increased spending on the discretionary goods. It also missed estimates at $3.06. Similarly, it slashed its bottom line guidance for the year. Target's results were plagued by a wide range of factors, including inflation and supply chain pressures, weak results in discretionary categories as consumers shifted their spending from goods to services, and the company's own misreading of consumer trends. Much like other pandemic winners like Peloton did, Target overestimated the durability of the pandemic tailwinds, not realizing how quickly consumer spending would normalize to pre-pandemic levels. As a result, Target was forced to mark down merchandise, and higher inventory leads to other carrying charges, as the company explained on the earnings calls. But guys, they obviously tanked by about 25%, which if we look over here, Target currently is trading about $155.36. Obviously the 52-week range is closer to what it went down for, but if we look at the market cap, it's about a 71 billion market cap company. It was around 100 billion, so definitely a huge drop. If we look at the dividends, guys, dividend summary, you'll see that the dividend yield is pretty amazing here, 2.32%. Annual payout, they pay about $3.60. Payout ratio is about 28%. 5-year CAGR is about 8.45%, which is closer to a double digit. And then they've been growing their dividend for about 54 years, so they are dividend kings. And to me, I'm gonna definitely be buying Target for the long term. It's in the consumer discretionary. If we look at the dividend yield, guys, this is one thing I want to show you. And we scroll down here. The dividend yield will actually tell us if it loads up. You'll see 1 year. You'll see that this is where it spiked up on 2022. So typically the higher the number here for us, it's the better. So if we look, let me see. Yeah, this one's right here. You'll see that typically over here, 2017 was the higher dividend yield, and since the price of Target has been moving upwards, the dividend yield continued to get smaller. But now we stayed closer to, after 2020, we stayed in the 1% for the dividend yield, and now it's spiked up after the drop, where it's about 2.32%, which in my opinion, it's a great opportunity. And I'm going to continue to dollar cost average into Target, see how it plays off. If I show you, well, I guess I really want to show you my my portfolio here for the consumer on Target. You see I have Costco as well. Costco did drop, we bought some, but Target, we have about 21 shares. Average price about $217, and then currently trading about $155. So definitely going to continue to accumulate these shares, continue to bring down my cost basis. I think it's a great company for the long term, and yeah, 2% dividend yield is pretty awesome from Target, a dividend king. And I see that happening. I see myself holding that for the long term. If we look at the technical analysis here with Trading View, you'll see that it did break it broke the 50-day, and then it broke the 100-day, and it's getting to the 200-day moving average for Target. You'll see that this is a 300-day, the purple line. But if we zoom out, you'll see that every time it hit the 200-day moving average, it was always great buying opportunities from Target. So it's definitely for the long term. If you plan to hold Target for the long term, I think, in my opinion, it's a great opportunity to dollar cost average. Obviously, you wouldn't want to lump sum invest all of this money into Target, because the stock itself could potentially go even down more, especially because there's no support at all here. Maybe it could bounce on the 200-day, or it could even break that and continue going back down. But in my case, I'm going to continue to dollar cost average, continue to reinvest the dividends back into itself, continue to accumulate shares, continue to bring my average cost basis down, and we're going to see that grow. And I think in the long term this will pay off as well. If I show you guys Costco, again, Costco broke the 50 and then the 100-day simple moving average. We could see they are going to report on Thursday, so it'll be exciting. Hopefully it drops even more, because it's currently trading about $412. Costco is a premium company, so you're always going to pay a premium for a company that's a premium company, right? So it's a great business model, and I don't mind buying it at $400 a share. But I'm going to continue to dollar cost average, especially because they have earnings. Hopefully we see how they got affected by inflation. Inflation has just been destroying a lot of companies and a lot of profits here, and the Fed really needs to get them under control. Well, inflation is what I mean. But if you'll see that Costco, any simple moving average that you could have bought here, over here, you would have gotten a pretty amazing return. And I plan to buy these companies, continue to cost average. These are great long-term buying opportunities that our future selves will thank us. But hey guys, this is what I have. Let's go ahead and jump over here to the Google Sheets. I'm going to show you how much we actually grew the dividend portfolio snowball this week. So I already have a copy of this, but let's go ahead and go over here to dividend payout. This actually gets all the dividends that are in our portfolio and see if there's any dividend raises, any companies declare dividends. And I remember American Towers did declare a dividend raise, so let's see if it picks it up. You can go over here to portfolio tools, get latest dividends. It takes a minute or two, and it wipes everything, recalculates everything from our companies that we do have in the portfolio, and it's running right now. And there it goes, guys. Hopefully it picks up the American Tower dividend raise, which it looks like it did, which is pretty awesome. I have these scripts again available for free. All I ask in return is that you subscribe with that bell notification. You drop a big thumbs up on my videos to help out the channel, we can continue providing this content for free. But you'll see that we have American Towers here, guys, 2.14%. Pretty amazing. You see all the dividend raises from our companies. This is why I really love dividend growth investing. Even though the portfolio is going down, our dividend yield itself is going up even better, and in the long term I think it will be paying off very, very well. But you'll see that Starbucks, we have one more company for the month of May, and then we will wrap up May, and then we will start off June, which is typically my best paying month. So definitely looking forward to that. If we look at the settings, guys, we'll go ahead and delete this, and let's go ahead and jump over into personal capital so we can get the latest version of our portfolio. I'll see you guys over there. Alright guys, so we're here at personal capital under my M1 account. You'll see this green button, click on it. That'll copy the content of the portfolio holdings into your clipboard. Then we can jump back over to the Google Sheets, right click, paste special values only, and we are good to go. If we go here to holdings, you'll see that these are holdings, but this is outdated, so you're going to click portfolio tools, and when you click update portfolio holdings, this will wipe everything and use the new stuff that we just pasted. So click on it, everything will get wiped. And then if we look over here to the calculations, everything's getting calculated. And looks like it's done. You'll see the dividend yield has gone up 1.86% because the portfolio has gone down. Yield on cost is still 2.58%. And then yearly, guys, we finally went to $3,205.31 compared to last week $3,196.83. How cool is that? For the month, we're getting to be making about $267.11. So we went up about $1, which is pretty great, especially with the portfolio going down. And then the week, $61.64. So we went up about 16 cents. And then for the day, we went up about 2 pennies. For the hour, we actually went up 1 penny. So every single hour now we're making about 37 cents. And then hourly work wage, this was if our portfolio was to go work a 40-hour work week. They would get paid an hourly rate of $1.54. Long-term goal is to try to get this to minimum wage. We'll see how long that takes. But yeah, guys, it's a pretty awesome week. Great opportunity to buy the dip, continue to dollar cost average. If you haven't subscribed, be sure that you're subscribed with that notification. Drop a big thumbs up on the video. And if you stuck all the way to the very end, drop a hashtag dip, because we are going to be buying the dip, and it'll be pretty awesome. It'll pay off in the long term. And I will see you guys in the next video. Take care, stay safe out there. Bye, guys.